morning to you and welcome to another powerful edition of Money Monday, the show that puts your wallet and your business and your future first. My name is Angela Kabete, and as you know, everybody knows right now our country is at a turning point, from the recent Gen Z-led protests to rising economic pressures, youth unemployment and business uncertainties, and many Kenyans, everybody out there is asking themselves, how can I secure what I've worked hard for? You know, that thing that you have worked so hard to build. So let me start by asking you, what if you are hospitalized and you can't work for a month? Do you have something that is sustaining you? You know, what if your business burns down overnight, or umekuwa affected in the protest that has been happening in our country and your business is looted, you know? Or worse, what if something happens to you and your family has no fallback? These are not just what ifs, they are real life scenarios happening out there in each and every day. And that's why insurance isn't just a luxury, it is a necessity in today's world. In fact, statistics says that only 12% of Kenyans have life insurance. Over 80% of businesses, they don't have insurance to cushion them from disasters, and the majority of the young people, especially the Gen Z, remain financially exposed. And that's why today we are cutting through the confusion that with the help of an expert. That is Peter Waweru, the founder of NTIDAI Insurance Agencies, to show you how insurance can be a shield for your life, your hustle, and your future. Today you learn the different types of insurance that makes sense in Kenya right now. You know, why affordable coverage is actually within reach. Real life stories that you get to hear of resilience and recovery from insurance, and how insurance fits in your financial freedom. So make sure that you get to grab a pen, a notebook, and tell a friend to tune in, and let's protect what matters the most. Without further ado, help me welcome our guest to today's show. Mr. NTIDAI, a very good morning to you.
Good morning.
You're well?
I'm well.
We are honored that you've created time to be here in today's show.
Thank you.
And salimia watazamaji.
Good morning, all our viewers. It's a pleasure to be back here and we discuss what matters in your life every day.
Okay, and you know, let's start by, in 2 minutes, briefly explain to us, where did you get this inspiration to start NTIDAI Insurance Agency?
First and foremost, I'm a teacher by profession and I studied education at the university. But before studying education, I had done a course that is international trade, that is clearing and forwarding. And one of the courses that I did was marine insurance. What drove me to go back into the insurance is way back in 2013, 2014, there were so many fire incidences in this country that caused a lot of destruction in our schools. And the government came up with a task force to look into what are the causes and the remedies. So one of the remedies that was brought in by the government was that the schools need to be insured. Reason being, it is the government money that has been used to build those schools. So that when those students destroy the properties of the school, it is the government that goes back again to rebuild them using the taxpayers' money. So the government did set 2,000 shillings per child. Out of the capitation for the high school, that is usually 22,000, 2,000 was set aside for the purpose of insurance. Bearing in mind that you have a total of 3 million students in this country, when I did that calculation, there was a 6 billion shillings for grab. So with that at the back of my mind and with the background of my insurance, this is a good venture. By that time, I was doing financial advising with Sanlam as a financial advisor. So I realized this potential that is there. Okay, and that is how I was able now to approach Sanlam, and I was given a position as a segment manager. With that now, I started a department of the Sanlam Schools Solutions, whereby our main aim was now to insure the schools. The government had an idea that they want to insure the schools, as well as, you look at, there's so many accidents that happen within the school, and therefore they came with what we call the group personal accident. But for the first 1 year or 2 years, 2016, 2017, they realized that that money is not utilized as it should be. And therefore, the government came up with a program that has helped so many people in this country, what they called the Edu Afia. The Edu Afia is whereby a student would go, in case of the illness of a child, while in school, he would be taken fully medical cover. And that has helped so many students until 2022, when the new government came in and did away with the Edu Afia. So the government had already set the 2,000 to take care of the students. That is 1,350 was take care of the student. So then the 650 was take care of the properties of the school. That is to insure them against fire, burglary, public liability, and any of the eventuality that may come to a school.
And so that's how you ended up in insurance.
Yes, I saw an opportunity and I grabbed it.
And now let me ask, because according to statistics, they say that only 12% to 20% of Kenyans, that is the day-to-day person, the common mwananchi and the businesses, have taken insurance. Why is the uptake so low?
In fact, let me correct you. The penetration of Kenyan insurance market in this country, as per the Insurance Regulatory Authority statistics, is at 2.7%, not 12, 2.7%. That is less than 3%. One, the reason as why majority of the people have not taken insurance is, one, the knowledge, lack of knowledge. That is number one. And number two, there is that misconception about insurance, that insurance is conmanship, insurance is gambling. I'm gambling. But I would want to say that insurance is not conmanship, insurance is not gambling. Because that is where majority of the people are not taking up insurance, because they take insurance as to gamble. Insurance is not gambling. This, I would want to explain it in a very simpler way. In our villages, in our homes, when somebody passes on, we come up as a group and ensure that we changa for that family. When a person falls sick, we come as a group in the village and we changa to ensure that that person goes to hospital. If again somebody doesn't have enough school fees, we come for a harambe, and all that is what we call traditional insurance.
Is it good? Is it okay?
That is traditional insurance, whereby you have an insurance because of the people, the surrounding people that you have. You are safe because of our old parents used to have what you call the traditional insurance, whereby if you are cattle, you keep livestock, you would move your livestock from one place to another, where there is grazing, fodder and all that. But that is a traditional insurance. But now, as things change every now and then, we have professionals who have understood and they take a risk and analyze that risk, under what you call the actuarist. They analyze the risk and see this is a risk. And therefore, if we take a number of people who are prone to the same risk, then we take the money and put it a pool together. So that when one of those people has a calamity, we come in. That's what insurance is all about. That is what we call modern insurance.
Then why haven't people embraced it if it's that good?
But I've said lack of information and to understand what insurance is all about. Let's take a very simple example. We all know that when you have this is the genesis, for example, of the third party or the motor insurance. Every time somebody has a vehicle on the road, there are chances that he may hit somebody or destroy somebody's property. Okay? So, all the vehicles that are there, if we took all the people who have their vehicles, we pool their money together so that in case one has a calamity or has an accident, that money that all of you have saved is taken and used to compensate the person who has been hit. The small money that you give is what you call the premium. The small money that you give is what you call what? The premium. So you give us more premium, another premium. The actuaries have already understood this, and a professional has taken it into consideration so that they know this is a risk, and therefore we can actually be able to work it out so that when one person has a calamity, we are able to come in kidogo and we compensate that person. We take that person back to the position that he was in before the occurrence of that incident.
That sounds interesting. And you know, we have just come from that is the Gen Z protest that fueled that is economic frustrations for many businesses because they lack protection, let's say that. Then how does insurance play a role that is in building economic resilience?
Now, you see now, we take that there is risk. For example, the current risk that you have here is what you call the demonstrations.
Yeah.
The destruction of the businesses. The businesses are destroyed maybe through the goons, whatever they are calling, in quotes, the goons. Now, that is a risk that has been taken by the insurance and has been classified under fire and perils. Fire and perils. So one of under the fire, we cover the properties that may be burnt out of maybe electricity, natural fire, bushfire, either other perils. When you talk about the perils, you have lightning, the flood. Okay, then there is some other overrides on that fire and perils, such as political violence and terrorism. It's an addition. Okay, so when you take a cover on against fire, then you have a fire with fire and perils, then you add that on political violence and terrorism. If you take your motor vehicle insurance cover, you take a comprehensive cover, then you add on top a political PVT, we normally call it the PVT, so that when in case now your vehicle is destroyed during that political upheaval, you will be compensated. Therefore, your business, you will be compensated, and you'll be back to, again, under fire and perils, there is another component where you call the business interruption. Why do you talk about the business interruption? When you have had that incidents, remember, there are employees who are depending on you.
It's true.
You have loans that you need to pay. And your business has been destroyed. Those people who are depending on you, if you don't have an insurance cover, how are you going to pay them? At the end of the business is not running. You have a loan that you're paying, yet your business has been interrupted. During that period when you'd be reconstructing and restocking the business, where will you get the overhead expenses to cover them? That is where under fire and perils we have the business interruption. Okay, so you'd be now, that part will be able now to compensate you so that your life goes on. In the process, you remember, there are some people who will be injured. So if you, again, you don't have a medical cover, you don't have a personal accident cover, if it is your employees during those fracas, they may be injured while there. Those of your employees who have been injured while the fracas, maybe they wanted to protect the property. What is going to happen? We have what you call the Work Injury Benefit Act, or the WIBA. It will take care of all the injured employees. For a police officer, they're doing a very good job. Those police officers, again, if they are injured again on the same, under the labor laws, as an employee, they are covered by Work Injury Benefit Act. Some of them may lose their arms. Some may lose their may have permanent total disability. Then the WIBA comes in. That is an insurance that takes care of them.
You know what is running in my mind right now? Probably this is how the common one, they reason out there now. That's why probably they're not taking the insurance. My business is not affected. I'm not going to get that money back, so they don't see any license or they don't get the insurance.
That is very, and that's a very good question, and that's a very good thinking of majority of the people. What if I don't have a calamity?
Yeah, what will happen?
What will happen? I've given my money and I've not had a calamity, so it is a loss.
Yeah, to them it sounds like a loss.
But look at it, and I want to explain it in a very simple way. We have a third party cover for your, or you have a third party cover for your motor vehicles. then your motor vehicle has hit somebody. Okay? Currently, the motor vehicle cover you pay, according to the Insurance Regulatory Authority, is between 7,500, 12,094 shillings for a third party.
Yeah.
But within it, you have a risk that has been taken up by the insurance in case of a total fatality, and that person has died. The insurance should pay 3 million for that one individual. So when you don't have a cover, when you don't have what? A cover, you are taking that risk, carrying it on your shoulder. In case somebody is injured by my vehicle, I'll pay that person 3 million. Now, as a business person, you have your employees. These employees that you have, according to the labor laws, in case that employee is injured while at work, okay, and get a permanent disability or passes on, the labor laws states that you should compensate that person to a tune of 8 years annual salary. 8-year annual salary. So let's take an example. You are a business person. Are you ready to take a risk of your employee, that employee who is in my business and is injured, and then you have to compensate him for 8-year annual salary? 10,000. If somebody is taking an example of 10,000, that is 120,000 a year. In 8 years is 960,000.
That's a lot.
Do you want to risk your business for that? Do you want to risk your business for that? Are you getting the example? So, and remember, it's only that ignorance in this country of the importance. As an employee, according to the labor laws, you're supposed to have 3 insurance covers for your employees. This is law. So if you're not doing it, you're going against the law.
So for any business, even a shop, if you employ that one person,
so long as you have somebody that is an employee in your business, you must, and this is a must, it's a law. You're supposed to have a pension plan for that employee, and that is why you pay NSSF.
Okay.
That is the law. You're supposed to have a medical plan for this employee, and that is why you pay SHA, and it is deducted on the payroll. Those are regulated by the government, and you pay through the government, and if you don't pay by date 8, the SHA people are there, the NSSF people are there. Then number 3, and where majority of the people fail to do, is the WIBA. It is, WIBA stand for Work Injury Benefit Act of 2007. If your employee gets injured while on duty and sues you, the labor court or the labor court would side with the employee, and it would be needed to compensate him as per the Labor Act. But how many employees? Do you know even that maid, that house manager in your house, that gardener in your field, that fundi, that mtu wa mkono who is in your construction, in case he's injured while on duty and approaches the labor court, the labor court would actually look at if he has a permanent or disability, or he dies while on duty. That watchman who is at your gate, in case he dies out of an accident, watchman, in case he passes on and is an employee, the labor court would say, how much was he paid per day, per month? Multiply that for 96 months. That is 8-year annual salary.
Oh my God.
That is according to the labor law.
Okay.
And remember, ignorance of law is no defense.
I agree. So let's hold on kidogo hapo. We go for a short break. But for our viewers, drop your question, for our guests. What confuses you the most when you hear the word insurance? I guess is here to help us. Please talk to us on 0799 200 100. That is our WhatsApp number. And still on social media handles, that is on Facebook and YouTube at Mizpah TV Kenya. Hashtag ni Money Monday. Stay tuned. We'll be right back after the short break. And welcome back. This is Money Monday, and today we're diving into something that is truly transformative. Let's talk about insurance, because in today's world, in our current nation, insurance is no longer a luxury, it is a necessity. And before we went for the short break, I told you in the comment section, MBA, what is that one thing that you feel it's confusing, the most confusing thing ukisikia insurance? Please talk to us on 0799 200 100. That is our WhatsApp number. And still our social media handles, that is of Facebook and YouTube at Mizpah TV Kenya. Without further ado, allow me to welcome our guest back to the show. Welcome back to the show, sir.
Thank you.
And I love the way you're bringing out, at least you are helping us understand the relevance and the reason as to why every person should embrace insurance. And now help us understand, because I believe say at least watu wametransform mindset yao na mambo ya insurance, but with the current economy, the economic downturn, things are very expensive, and some people out there, they might feel financially stretched, you know, but still, why is insurance relevant even if things are expensive?
One thing that we need to understand is that insurance is not expensive. One of the things that in Kenya we don't take into consideration is that we always want to run the last minute.
Yeah, I agree.
We always want to run
the last minute.
We also don't like doing what we call savings and planning ahead. And I will take a very simple example. We are all aware that at one time, my child will join high school.
Yeah, it's true.
My child will go to university for training.
Okay.
And you have two options. Either I'll take a loan to educate my child, or I do savings to educate my child. Majority of the people ignorantly prefer taking a loan to educate their children, without understanding that when you take a loan, whether it is from your circle, from the bank, from the Shylock and the others, you will pay it with an interest at that time. But with a proper financial planning, you will begin planning the moment the child is born.
Yeah.
Okay? Have an education plan for that child. It is your saving. Those savings will earn you some interest or bonuses. Then when your child will be going to school, you will get that money for education. The importance of having an educational plan, one, you are assured that my child will get that education at that time. Okay? And I'll have that money, but it is out of your savings. Out of your saving. But majority of the people would prefer taking a loan at that time, kusumbua watu na maharambe at that time. Yet you did not plan yourself over the years. Are you together? The beauty about insurance, and this is where it is very important. One, insurance, it's not an investment where you expect that because I've been saving, and that's the greatest problem when you're going for education plan for majority of the people. I've been saving 5,000 for 20 years.
Yeah.
How much have I saved? Then you expect that it will have earn you more interest on that. Remember, the insurance is you'll have the safety of the mind that my child will go to school. Number two, in case you're not there, and you had already started that educational plan, you are guaranteed that your child will still go on with education. I've had a few of my friends who passed on. We waiver the premium, the insurance continue paying the premium on your behalf, and then the child will continue with education as you had anticipated. That's the beauty about savings in education plans.
Now this brings us to that aspect here, that is you need financial discipline, and you know that is one of the things that many people are struggling with. So what habits would you recommend to a person when you know your financial discipline, that's why they're not embracing insurance?
One is financial literacy, and you know that your needs and demands go increasing as your family grows. Different ages have different demands. Okay. Right, together. So you plan well. So you have talked about planning for your educational plan. But remember, one day you are going to retire. When you retire again, what happens? You as an employer, you have employees who are depending on you, who are giving that business that you are earning and keeping your business there. So when those people will not be there, either through retirement or naturally they die, what happens? The insurance is a very good plan for you as a business person. Either you have a pension plan where you can have a pension plan for your business, okay, or you have what you call a group life cover. A group life cover assists you as a business owner. You say you have a very small premium that you pay. Then in case my employee passes on and is not there, we will pay 3 times or 4 times his salary. That's a group life cover. Okay. So that the life of that employee is not going, the life of the children is not going to be hampered.
So this amplifies what you have said. Number one, that is financial literacy.
Yes.
And then from what you have said, that is different ages, demands, have different demands.
That is very true. And that is why when you come to us as financial advisors in the insurance, we will be able to advise you as a business person how you can have a group life cover, you can have a pension plan for your business, and that pension plan will cushion your employees. I thank very much the late Mwai Kibaki. He realized that this nation had an aging population. The life expectancy of these people is growing, and therefore he foresaw a situation whereby years to come we'll have so many old people and we'll need to cater for them. And that is why he found that even what you are paying for our pension, remember I said there are 3 insurance covers for every employee, and one we said is a pension plan. He realized the pension plan that we're paying, it doesn't fit. So what you are paying for NSSF, you used to pay 200. I started paying 200 when I started my first employment in 1996. But even if you work for 30 years, 200, how much is it? And that is why they brought in an act of parliament, what you call the NSSF Act of 2013, so that the amount that you pay in NSSF is increased to about 6% of your gross pay. Why are they doing that? So that we have a decent retirement for our seniors. Okay? Have a decent plan for our seniors. So as an employer, you may have your own plan for your employees. And in case your employer does not have a pension plan for you, the insurance industry has what we call individual pension plan, where you can have your individual, as an individual, you get into insurance company and you start depositing some amount of money or saving some amount of money, which goes into your saving plan. And there's something I want to tell you here, very important. Your assets that you have today, your vehicles, your shambas, your houses and all that, in case of your demise, the money that is in your account, in case you're not there, your family may not have access to that money because it has to go through the succession process. That is the labor law. That is the Succession Act, the Succession Act. But the money that you've put in the insurance and you have your nominee would be the first to assist your family.
Wow, that sounds interesting. And let's go back to the question that I had asked you. Let's talk about a person who has a limited income. Let's say, for example, mtu anajua pesa extra yenye ako nayo end month, that is 1,000. That is a person with a limited income. How can he or she start the journey of being part of insurance?
The risk that you can have, for example, for a pension plan for your retirement is maybe 1,000. And maybe next time, Angie, I would wish to come graphically, remember my teacher, and I'll show you if you're saving 1,000 every month, cumulatively for about 10-20 years, using the power of compound interest, how your money will grow. You'd be amazed. Just 1,000. Okay? Just 1,000. 1,000 shilling or a shilling that you keep aside for saving earns you. Remember, the government encourages a lot of savings. So the moment you do the savings, there are some taxes that you are exempted from by doing the savings. If today you have an educational plan, you have a pension plan in your payslip today. You as Angie, do you know you are exempted 15% of tax relief by virtue that you're doing a saving to encourage people to do savings
with insurance, right?
Yes. So the moment you start saving, you are exempted from paying taxes. Okay, 15%, and you get every end of the year, when you're doing your returns, you can claim that money from an insurance.
And now help us understand the process now.
The process is very simple. Get a financial advisor. Okay, he will advise you according to your earnings, and then from your earning, which insurance fits you. Okay, which insurance fits you at your age. Is it an educational plan that you require? Okay, is it a pension plan that you require? Is it a group life cover for your employees that you require? If you are taking a loan, you have that chama, do you require the credit life covers, so that those people that you're giving money and you're lending money in that chama, in case of their demise, you don't have to go and correct sell the property from their family. Are we together? If it is that business that you have, your business, you may be two people in a business as partners. One of your partners passes on, na familia wanataka kuchukua the share of the business. The business will collapse. But do you know, in the insurance, we have an insurance that takes care of that. What you call the key man policy. It takes care of your two business people, and you're in partnership, it is covered.
Okay, so you've explained that when you want financial advisors, we really need financial advisors if you're going to embrace that is insurance. And now najua kuna watu wenye waliingia kwa insurance zingine zika shut down, and now that's when our watu walifika wakasema mimi na insurance tumemalizana. I want you to help them understand what are the things you're supposed to consider when you're choosing an insurance company.
That's a very good question. Quite a number of insurance have gone under, but just as I said, financial literacy and the knowledge, there's what you call the policy holders compensation fund. Policy holders compensation fund. And for anyone who has actually taken an insurance, you'll find in the premium that you pay, there is always the PHC, the policy holders compensation fund fee that is part of your premium. So in case a company goes under, we have Invesco that has gone under right now. I've had cases that were there. I had claims that were there. You only need to notify the policy holders compensation fund, wako pale hapa here, and you'll be compensated. You don't lose your money even if an insurance company goes under. I want to give you that assurance. Even if an insurance company goes under, your money, you don't lose your money, because there is already a government regulated policy holders compensation fund that takes care of that.
And now let me ask, kuna watu wamepitia wash in the name of insurance because of social media. Then what did they not consider?
And this is very important. Any money that you have, you don't give your money to an agent, to a broker. All insurance companies have their pay bills. Pay your money through the pay bill. Don't give your money to an insurance agent, to an insurance broker. Always, I insist on getting the pay bill of the company.
Not the broker.
Not the broker. He will come, the financial advisor will come, but don't give them the cash. Always use the pay bill. And this I want to underline again. Always use the pay bill of the company. Allow me to explain something. Every company, an insurance company, has its strength. Okay? For example, under reputation, you want to have a saving plan. Britam, for example, has been having a very good plan for education plan. Britam, ICA Lion, Sanlam, CIC, APA. You need an education plan. Those companies are very, very well on that. You need a medical cover. AAR, Jubilee, APA. Okay?
Yeah.
They are very good. I don't care na medical cover yako, it will always be there and it will be taken care of. You need a pension plan, which are very good companies that I need to have a pension plan. Go to the best, it is even not much known. Go to Canada. Even my own pension plan is actually with Canada. Go to Britam, go to APA, go to ICA Lion, go to Sanlam for your pension plan. You're well taken care of. You have your Matatu, you have Amaco, you have direct line, and you have the newest in the market, definite. So depending on your cover that you require, which company will take care of for you?
So you're supposed to consider that their strength.
Very, very important. If you need what we call a legacy, one day we all leave this world, and you have people who are dependent on us. People who are depending on us. And Angie, the moment you're gone, you want your family members to continue with your life. Are you together? A company such as Prudential have a very good plan, and I would wish these one of these fine days we have that. Prudential have a very good plan whereby you are you have a whole life cover, such that if you pay for 10, 15 or 20 years plan, then you'll be on life for the rest of your life, such that when you are no more, your family would benefit from the legacy that you have. Instead of them having to fight for the, what do you call them, the assets that you have, Prudential have a very good plan where you can have what? A cover that will take care of you. Like together. So in a nutshell, what I want to put across is get a good financial advisor who sits down with you, analyzes your financial ability, after that gives you the insurance policy depending on the company that suits you.
And now let me ask, let's go kwa mambo sasa ya saving na investment when it comes to insurance. What is the determiner of the period that you're supposed to, let's say, save or invest your money? Unajua kuna policy yenye inaenda for 3 years, kuna yenye inaenda for 12 years. What tells me as a person nafaa kuchukua policy ya 3 years, sifai kuchukua ya 12 years?
That depends on the need that you have. You meet a young person who wants to buy property, land, build, get married. Okay, we have a saving plan that goes for 5 years. Okay, to ensure that they're able to 5, 10, to ensure that they save for that. You need an educational a plan, saving plan for the education of your children when they be joining maybe grade 7, grade 8. You have an education plan for that. Okay, you have one for pension. I'll be going on retirement at the age of 50. I want to have another retirement at 50. So we'll tailor make it to that. Are you together? So life policies or saving plans depend on your age and also the need that you have, and also depend on your income.
Okay.
So those are a number of parameters, and that is why a financial advisor is very important, so that he advises you on where, what, and how you're going to do. So how much do you have? What are your aim? So this is the plan that will fit you. And nowadays it is very important, it's very simple, because all those are in the apps. Okay, so it is very easy. I'll sit down, this is you, we have your data, and with your data it will give us a saving plan that would easily fit you. I'm at the age of 20, I need to retire at 40. Then we'll work out how much premium will you be paying. Okay, how much do I want at the end of my retirement? I want, by the time I'm retiring, I need to have 10 million in my for my retirement. Then we tabulate it. Okay, I want an education plan, saving plan, such that by the time my child is joining the university, I want to have 5 million. Then we'll tabulate it depending on your age. So your age is a determinant, when you require, and again your income.
And now let me ask, because you mentioned that is the pension plan, because it feels like it's only catering for the people who are employed. What about the people who are not employed?
A pension plan is not only for those people employed. Even you as an individual, if you have an individual pension plan, it doesn't tie you that every end of the month you'll be saving this amount of money. It is flexible. Are you together? So you can actually say, I want to be saving within my retirement, and therefore I'll come and advise you. We start what you call an individual pension plan. Okay,
so even for the people who are self-employed, one is a chukwa.
Yes, you can have your own individual pension plan. And with that individual pension plan, it is not on a monthly basis. It is, I know that this is my target. I can pay it annually, or I can pay when I have my money. And the savings that is in my pension plan is the one that I will use in my old age. Yes.
And now we have that is 4 minutes. Have you got, do you have any client testimonials on how insurance insurance compensated them back before a calamity happened?
Quite a good number of them.
You have one that you can share with us? That
one is my children that you
minutes.
can actually see here. I'm actually with my son and my daughter in the studio, as you see, and they've benefited from the educational policies. That is, I'm alive. That is one. Number two, I have a friend of mine who passed on in 2012. A colleague that you worked together. And when he passed on, his children, because he had the policies, they assisted those children a great deal, and ensured that the children were able to go through the education very well, even after his demise. His property were not auctioned because of the loans that he had. And for Morimu, the one that we worked together, it did very well. Yes. And so many of my clients right now here at Mairikumi, where we just reside, one of my client, gari yake iliibiwa, we compensated.
That's great.
2 in fact.
So I believe
one under Madison and one under Sanlam. Okay, they were compensated just here in Mairikumi. Okay, just in our neighborhood. Okay, and many clients that I've had that their vehicles have had an accident, they have been compensated. I even had one of my friends who was once my driver. He had an accident up to my Risaba. I ensured through the insurance, he was compensated. He bought his own vehicle. He was able to be compensated even for the injuries that he sustained, permanent total disability.
Okay,
so there are quite a number of them.
I believe for our viewers by now we understand why you need insurance and what we mean when you say insurance is no longer a luxury, it is a necessity. Thank you so much for availing yourself for the show. I believe that our viewers have learned a lot, and because time is up, you can share your number that in case mtu mwenye ako interested atakutafuta.
Thank you very much. I'm Waweru, trading as TIDAI Insurance Agencies. My contact is 0722 23 9067. I'm located at Tower 1, 2nd floor. You'll always find me there for all your businesses. My phone is open 24/7 for all insurance services. Karibu.
Thank you so much for availing yourself for the show.
Much.
And also for our viewers as well, make sure that you get to share with me what is that one thing that you have understood when it comes to the world of insurance. And just a reminder that we'll be having upcoming events that is at Mizpah Prayer Center, and one of them that is Mizpah School of Intercessory Prayer and Deliverance. I'll be taught matters to do with deliverance from bondages and curses. That is module 1. Then we'll have module 2 where we taught about altars. We'll have module 3 unafundishwa spiritual warfare, how to pray, and then module 4 where we taught the new creation lifestyle, how you're supposed to live the godly lifestyle after you have been delivered. Intake is ongoing on. It will be happening that is from August 11th to the 22nd. For more information, please contact 07277 66553. In addition to that, don't forget that we'll be having that is the interdenominational prayer rally that will be hosted by that is Bahati and Subukia Sub-County Pastors Fellowship, and it will be happening that is 2nd August. It will be on a Saturday. In answer that is from 9 a.m. Let's gather together. Let's pray for our nation. Let's pray for the churches themselves, and it is free and open to all churches and believers. So make sure that you get to tell a friend to tell a friend. For more information, please contact that is 0711 395 570. My name is Angela Kabete. Till next time, God bless you abundantly.